Not every trade ends in profits, and today's EURUSD setup is a perfect reminder of that. This trade hit stop loss, but it still followed my rules and my plan step by step. In this breakdown, I'll show you exactly what I saw, why I took the trade, and how I executed it with confidence. Because in trading, discipline matters more than a single outcome. Let's get into it. On the 50 minutes chart, the market was clearly bearish, consistently printing lower lows and lower highs, establishing a decisive downtrend. On the 5 minutes chart, price action aligned perfectly with the high time frame momentum. The structure mirrored the 50 minutes trend with lower lows and lower highs, while the candles displayed strong selling pressure and sustained bearish momentum, reinforcing the downside bias. Refining the focus to the 1 minute chart, the execution zone, I looked for 3 critical confirmations I always require before entry: liquidity, manipulation, and counter trend break. First, I identified a pullback setup, setting the stage for entry. Next, equal highs formed, creating a visible pool of liquidity. Shortly after, liquidity was swept, producing the manipulation move and clearing out early positions. And finally, I observed a counter trend break, a market structure shift, confirming that price was beginning to shift back into alignment with the dominant bearish trend. With all 3 confirmations satisfied, I executed the trade with confidence. This position ultimately ended as a losing trade, but losses are an inevitable part of trading. Not every day is a winning day, and the goal is to remain consistent in following the process. If this breakdown helped, make sure to follow for more insights and trade recaps. Until next time, stick to your edge, trust your analysis, and execute with discipline.